I recently made a video on the prop firm Funded Trading Plus. Out of all the prop firms that were started this year, this prop firm by far has the most potential. This prop firm might not be for everyone, but it has two-step, one-step, and instant funding options, which is the whole suite of all the ones you possibly want with a good prop firm. In this video, I'm going to be interviewing one of the founders of this company, Simon. Here he is.
I'm Blake. It's a pleasure to be here and be able to talk about our firm with you. Yeah, I'm the managing director of Funded Trading Plus. I'm one of the owners. So essentially my practical role is just sort of the day-to-day running and overview to make sure everything's going right. That's really important to us with the firm.
What originally got you into trading yourself?
It goes back quite a long time now. It's a really sort of coincidental thing. Back in 2010-11, I was watching the news, and at the end of the news in the UK on the BBC, it was talking about all the financial sort of affairs, talking about the Dow Jones is down, whatever, the FTSE's up, whatever, and that just prompted me to order a book on finance. And without going into a huge amount of detail, big Financial Times guide to investing, there was a very small section talking about spread betting, which is essentially a CFD. And then it just sort of spiraled from there, and then all the sort of usual things that you hear from people who get into trading about the idea that you could sort of be financially free, you could have your own time, be your own boss, all those sort of cliches that are often really big motivators for traders. That was sort of the driving force to sort of continue to trade, if you like.
Why did you come up with Fund Trader Plus?
Well, in 2013, we started Trade Room Plus. I done a live trading room for the past 9 years. Sort of, one of the reasons we did that is it makes you very accountable if you're trading in front of people. I dread to think how many trading sessions I've done over the years. And a couple of our traders came to me as funded trading started to sort of evolve and said, the strategies that you teach have helped me pass a sort of funded trading test. So they were like, you do a course or something like that. So I said, yeah, no problem. So we put that together, and that resulted in me sort of going through multiple different funded trading courses to really get an idea. And I spoke to my partners who have been working with for a long time, and I was like, I think we could probably do this better from a sort of trader's point of view. And that was sort of the genesis for it, if you like.
These other founders, is it just you and one other person, or how many people are on this team?
There's two of us. There's Michael, who's the director of marketing and things like that, and there's James, who's the director of operations. Two people. I've been working with Michael for a long time. I've been working with James for a few years as well. So when you get that working relationship with just two people who you connect with, or I guess vibe with, as the kids would say these days. But you only get those special relationships in business, and it is very much that.
Can you touch on a little bit more about the specifics of Fund Trader Plus? Why would someone choose this program over other prop firms?
Yeah, it's a really good question, because I mean, there's a lot of prop firms out there at the moment, and that's always good. Competition is good for the trader. I mean, as I just alluded to a moment ago, I went through things from a trader's point of view. I went through all these different firms very much from the trader's point of view, originally with no intention to create a firm. So it was very much just that sort of perspective. And it was like, I was looking at all these different rules that I didn't like. For example, time limits, for example. I was like, why is there a time limit there? And without being overly critical, it's there to put pressure on traders, and that wasn't acceptable to me. And it was just all these firms I was going through, and they just had all these little different rules and sort of things sometimes there to trip you up. Some are obviously better than others. And I just thought to myself, what would I want as a trader? And then I thought, well, why we could just create our own and try and make it better, if I do say so myself.
What are the rules that your program has?
Well, we only have 2 drawdown rules. So I thought, what are we trying to do when we're trying to assess whether we want to give a trader capital? What would I want to do in order to earn money as a trader? And what would I also want to do as an investor, someone who's backing someone? It's a case of just managing risk. We just want people to be able to demonstrate risk management, sort of overall drawdown, and a daily drawdown that eventually gets removed on the live account. And that was it. We didn't want to be tripping people up for trading too many contracts. Time limits was a massive one for me. It's why would you want someone to pass in 30 days, for example? Well, does this put pressure on people? That's not how real proprietary firms that you find in a city like New York or London, the physical ones, would actually work. You don't put pressure on traders. Trading's hard enough. So we just wanted to have 2 rules, and then everything else be simple. Just other little things like, bottlenecking profits. Like if someone's made profit, let them withdraw it. Or scaling plans that, if you do X amount in X months in a row, it's like, well, no one's going to achieve that. If you're giving someone a scaling plan, make it realistic. So for us, it was a case of just having 2 really, really simple rules that people had to demonstrate risk management. And then basically that was about it. Just give people the freedom to trade, allow them to trade sort of most of the EAs that are out there, allow them to take short-term trades, allow them to hold over weekends, allow them to trade over news. Just all the things to allow traders to sort of demonstrate their abilities and not have things in there to trip them up, essentially.
You're also maybe the first or one of the first programs I've ever heard of that will actually remove the drawdown requirement on the funded account. Can you go into a little bit more detail on that?
So we want to sort of take the reins off traders. So when traders go live and they hit what we call the profit target, it's not a profit target per se, but when they bring their relative drawdown to the starting balance, say for example they make 6% profit on an account on our experience program, for example, then we remove the daily drawdown requirement upon request. Some traders like to have the daily drawdown because it keeps them disciplined. Others want it removed, and then it just allows people to have that greater freedom and flexibility to be able to trade. Because if someone's passed an evaluation, if someone's managed to then make money on a live account, then they've demonstrated their trading skills, and we as the people backing them should trust them, and we should give them the freedom to be able to, trade their drawdown as they see fit.
It seems like you actually want to see people succeed, because if they are already so much in profit, you can just remove that completely. It seems like a trader can scale so easily into the hundreds of thousands of dollars or maybe millions potentially if they're really good at trading. That's quite amazing. So in terms of future improvements, what can we expect for future developments and improvements with your program?
Well, it's interesting. So we've made quite a few already at the moment. One of the things we're doing is listening to the traders who give us some feedback and say what they want. We recently increased our leverage to up to 30-1 because traders were asking, trust us, we can use it sensibly, even with the buying power. We changed our scaling plan and things like that. I mean, for us, it's a case of not just copying what everyone else is doing. We're looking at maybe some more disruptive plans, some different experiences. We're probably going to put some larger trading accounts up there as well for people to have a look at, but there's nothing. I mean, we have done our most recent raft of improvements. There's nothing specific in the short term, sort of in this next couple of weeks, but we're always going to be looking for improvements that allow traders to be able to express themselves more appropriately.
And I know that FTMO has a similar program where they allow 1 to 30 leverage, but other than that one, I think you guys are the only other ones to have 1 to 30. How come you decide to settle on 1 to 30 maximum leverage?
Yeah, I mean, there was this big review, the European Market and Security Authority, ESMA, in Europe. They, back in, I think it was 2016, did an enormous review of tens of millions of trades across all the brokers in Europe, all the CFD brokers like we're trading with. And they found that there was a direct cause and effect between higher leverage and account failure. We actually write about it on a blog in our sort of result. And so, if you want traders to fail, you give them excessive leverage, because traders often don't use leverage responsibly. They can take positions by accident and things like that. It's very, very simple. The data and the evidence are clear when it comes to that. So ESMA recommended 30-1 on FX and then 20-1 on other things like indices. And that's exactly the model that we've created, because it's data-driven, it's rational, it has a basis there, and that's what was placed upon the whole industry in Europe, because it was for the traders' benefit. It wasn't for the brokers' benefit. The brokers wanted to keep the leverage high because traders failed quicker and the brokers made more money. But the regulator said, no, better for traders is 30 and 20-1. So we think that's a sweet spot. Large accounts, plenty of leverage. You times your buying power, you got up to 6 million buying power of us. That is more than enough for any sensible trader to take positions and make serious sums of cash.
Yeah, that makes a lot of sense. And I think I don't use more than 1 to 3 leverage anyways in my trading for any position. So I think that's, for me at least, that's plenty. So I know that some other prop firms have had issues with allowing EAs, in particular, if too many people are on the same EA, and that EA maybe will pass and prove itself essentially, but then might have a big risk if it ends up failing or something. Do you have any risk mitigation techniques for that?
Yeah, absolutely. I mean, you're talking like a black swan event, where you get a lot of traders in line with each other. They're all in the real market and it all goes against them. Yeah, absolutely. I mean, if I get into a huge amount of proprietary detail, we have some very sophisticated risk management systems, almost sort of like broker level, like I say, without going into nuanced, boring detail about it. But essentially, we've got systems that will identify when there's patterns that are copying each other, when there's flow, all in sort of exposed to a certain instrument. And we can look at hedging that, we can look at copy trading that, we can look at doing some quite sophisticated things so we don't have a huge amount of exposure. I mean, if you get a lot of people in line and they all make a huge amount of profit, then that's absolutely wonderful for us, because we're going to be backing them in the real market. But if we, like I say, we're identifying that there's a lot of people passing all using the same EA, then we're in the position where we can sort of finesse that risk management to make sure that we're always going to stay in the game. I mean, fundamentally, worst case scenario, we take a bit of a hit because something doesn't go in our way. And we're in the business of risk. That can happen. There's always that statistical outlier. We have a large amount of capital to absorb a hit as well. And we're always making sure we are, to use the business saying, cash rich, to make sure that even if we do have a scenario that's maybe in a blind spot or something, or something lines up or there's a black swan moment, that we can still stay in the game. But we can take multiple punches and it's still not a problem. We're still going to have the money to pay the traders out who are profitable.
That's reassuring to hear. So your company has something of a relative drawdown. Can you explain how that works? And is that always going to be on there?
The relative drawdown is essentially going to be trailing the equity that people have as well. Now, obviously, there's static drawdown, there's relative drawdown. The reason we've picked relative drawdown is because we pretty much have no other rules, and we need some way that traders can develop or sort of demonstrate sensible risk management to us. We can do a static drawdown, we can put time limits on people and pressure them, or we can have sort of profit withdrawal sort of barriers and rules, and we can do that sort of model and structure. But we'd rather have no time limits and say to people, look, you can pass in a day. We've had people pass in a day and withdraw the day after, or you can take several months to pass as well. What we want you to do is just focus on your risk management, not be under any pressure, and just demonstrate that you can get that sort of relative drawdown to break even. And then once you do on the live account, then we can take the leash off and get rid of the daily drawdown. Then you can really start putting your foot down, generating that capital, make 10% on one of the programs. You can get straight into a scaling, and then you can really start accelerating your trading progress. I think the overall message for us is just don't rush. Take your time. The markets are going to be there. There's always going to be another trade. I've been in the game 10, 12 years now, and that's one thing I've learned is you don't need to rush.
And how is your firm able to offer such great conditions? Are you ever worried about any rules that are too loose and you might find that you're not actually getting the absolute best traders as possible?
I don't think so. I mean, you're always going to get people who will take a bit of a punt. Even on 30-to-1 leverage, you take a $200,000 account on 30-to-1 leverage, and you can still take enormous position sizes. So you are always going to get those people who may just take a punt and they get lucky, and that's just part and parcel of the business, really. We're still, they've earned their account, they're still going to get that live account as well. But from what we've seen, the core majority of traders, once you take away that time pressure, they generally do look to take sensible trades. That's the biggest. I know I've mentioned this several times, but and that's the same thing when you look at our Trustpilot. It comes back time and time again. People are talking about the lack of time limits, and I think they get out of this mindset where they need to take these excessive risks. They need to take these excessive position sizes because they've always got this time limit bearing down on them. So by removing that, we're generally seeing with the core of traders some sensible sort of trading behaviors, if you like. So at the moment, there's nothing that really concerns me of how I've got things structured.
Yeah, I'm sure a big fan of the no minimum, no maximum time limits. I think that's really, really key. So do you actually back these traders once they get to the funded stage?
We do, yes. That's what we always wanted to do, to make sure there was always going to be sort of capital, or there was always going to be profit. So when you do get those traders who do make tens of thousands of dollars, sometimes hundreds of thousands of dollars, that profit is going to be there, and we're going to be able to pay them out with. We're never at risk. We want as many profitable traders as possible. Our goals are completely in line with the traders as well. So yeah, we do underwrite our traders. Like so, we do have some sophisticated risk management systems, but by and large, we're essentially just backing the traders to make sure that capital is there and that profit's there and available to pay them out. So we're never going to have someone who's had a fantastic trading week and made tens of thousands of dollars. We're never going to have them worrying that the profit's not there, because it's always going to be there as well. And the advantage of putting people in the live market as well is, it from our point of view, is it's harder to sort of, the people who want to do any sort of abusive practices, they can't really do it because they're in the live market. So it's a double win for us, if you like.
Why should people trust you, and how will they know they're actually getting paid out?
Yeah, that's a really good question. I mean, people who know us, we've got quite a strong trading community from 2013. Now we've always sort of operated a very transparent, accountable way. We're obviously a British registered limited company as well, so we've got that degree of accountability. People could come into our Discord and see our actual traders put in sort of proof of payout and discussing things. Our management team's very transparent. You've always got sort of access to Michael James now, very interactive in the community, doing live trading sessions, been available to talk to people. On Trustpilot, we have it set up so Trustpilot emails out everyone. We don't pick and choose. So if you look at our Trustpilot, we have a little verified symbol which shows that it's actually real customers who are going to be sort of reviewing us. And I think from what I've found is the funded trading community, like the one that sort of follows you, are very, very switched on. They're very sort of knowledgeable about the industry, and it's really good to see. So I think if you're going to start trying to do things that are sketchy, that you're going to get found out straight away. You start denying people payments. If there's something that isn't quite going wrong with a firm, people are going to sniff you out straight away. You know, it takes the old cliche, it takes sort of a lifetime to build a reputation, but a few seconds to destroy it. And we're very, very aware of that. And, you know, we spent a good year to 18 months sort of modeling and making sure that we had all sort of contingency planning, stress testing, worst case scenario planning, all these horrible doomsday scenarios that are like a 1 in a million chance we considered. It's called a pre-mortem, isn't it, if you want to get into business nerd stuff. But that is just basically making sure that we can stay in the game no matter what and always have sort of profits available to pay out our profitable traders.
And what are your best tips for people who do want to pass these challenges?
Find a firm that doesn't put time limits on. The worst thing you can have with trading is external pressure. Take your time, keep perspective. The markets are always going to be there. I know it's very, very difficult when you start trading. You want to be watching the charts all day. I'm different. I trade for an hour a day and I couldn't care less what else happens. I'm a day trader, but that's a more developed mindset. Make sure you understand the rules with the firm as well. Like I say, don't get carried away. Don't get sort of greed. You know, just think about perspective, thinking months, quarters, and years in terms of where you want to be in that time frame, rather than, oh, I need to pass today, I need to withdraw tomorrow. Don't put pressure on yourselves. Take your time. And remember, if the market's not sort of conducive to your trading, just step away. That's the best thing about being a retail trader, is if something's going crazy, then we can just step away. We can watch it. We can return to market conditions that are normal. We're trying to trade the market as it is 95% of the time, not the unusual 5%. I'm going into my trading education mode now, but they're sort of my top tips that I would say to pass funded trading tests.
Great. I love to hear that. I guess last question, where can people hear more about you and the other founders?
So I've got a couple of YouTube channels. I've got Funded Trading Plus on YouTube. I've also got Trade Room Plus as well, that's been around again since 2013. I think the best thing to do is join our Discord. I'm a huge fan of Discord. I've only been using it since we did Funded Trading Plus, but I do live trade sessions in there. There's obviously all our payout proof. There's our community. People can access the questions. It's one of the best ways to sort of access our staff and our founders as well. So for me, the best way is the Discord, but also do have a look at our YouTube. It's got some great interviews with some of our successful traders, and it just allows you to just get a better feel for our firm as well. And of course, you know, if you do have any questions for us, do contact us, email, Discord, anything like that, and we'll get back to you.
Thanks so much for your time, Simon. Appreciate it.
You're welcome. Thanks, Blake.
If this prop firm looks like one that you want to try out for yourself, be sure to use the code VVS. It's going to give you the best incentives and discounts of any code out there. I and the founders of FT Plus will be reading and responding to your comments in the description below this video. So be sure to let us know what you think there. If you want to hear my thoughts about this prop firm and you haven't already seen my review on this prop firm, be sure to check out this video right here. I went into a lot more detail in that video about all the specifics about this prop firm. So be sure to check out the video. I hope you enjoyed this one, and I'll see you guys in the next video.